Okay, folks, welcome to Thursday Night Stock Charts Live. Another Thursday. How's the audio? We good? I have my red light on. Looks like we're good. Amerimigo, hello. JW, hello. Joseph, hello. Amerimigo again. Trading. Let me get my glasses on here. Trading the NTF stocks. What? Do you have a symbol for one of them? I haven't really looked into them at all. Matt Carter, good to have you, brother. Larry, words from the great Gordon Gekko. It's all about bucks. The rest is conversation. No doubt. SLV is a scam. Looks that way from their own prospectus. Look at the PSLV. You're probably better off. Okay. What we're going to talk about tonight is, of course, how we're setting up on the week. We'll talk about some of the economic data that came out this week, and we'll talk about the impact of the stimulus checks that have gone out to those who qualified and what impact that's having on the market. Before we get to it, I want to first give a shout out to our sponsor over at TrendSpider. If I could get them up here. Automated technical analysis, folks. Automate your grunt work, speed up your analysis, and improve your accuracy at the same time using the built-in tools. In addition to the built-in tools such as automated trend lines and other functions, you also get seasonality. And we'll go over a couple of examples of seasonality tonight to show you the power that brings to your trading. Reduce costly analytical mistakes, find winning chart setups with their scanners, and time your trades with precision using their alerts. We'll also be going over that tonight. 35% discount code below. Take a tour. There's a link below. 7-day free trial offer. I give it away free to silver and gold level members because I believe in it so much. You can also have a demo tour, and they have TrendSpider University. I just got good feedback on their engagement. I think it was from Buster Stacks that gave me the feedback. So positive feedback. I'm not surprised, but I'm glad to hear it because they are getting bigger and they're not losing their quality. So that's good. Let's and any feedback, please feed it back to me. And if there are any opportunities or things that are good, I'll feed it back to management. I meet with them at least once a month. So let's talk about the impact of the stimulus checks. JP Morgan finds no bounce in retail trades despite the $1,400 stimulus checks. I think it's way too early to make that call. I'm still of the open mind that you're going to see some of that money flow in. Perhaps it's not as in great of an amount as we saw several months ago. The stock market's a lot more expensive. And they're going to have to take on a lot more risk, probably with call and put options to trade this market. So no great shock here. Let's give it some time. I want to talk a bit about economic data. And I think the biggest slap in the face of all the economic data that we got this week was, where is it? GDP. Here it is. They ticked it up to a growth rate for Q4 of 4.3. Okay. What drove it? You would think it's consumer spending, right? That's what typically drives GDP is consumer spending, business investment. U.S. GDP in Q4 raised slightly, and all signs point to an economy speeding up. Let's cut to the chase. I went on a rant about this morning on Swing Trading Today. Exports were revised higher, and state and local spending wasn't quite as weak as previously reported. Point number one. Point number two. The increase in consumer spending, by far the biggest contributor to GDP, was ticked lower. It went down. What's driving GDP? The government. Government spending. They produce nothing. Government produces nothing but headaches. So this is like an insulin shot. And that's about it. So this will fade fast, but inflation will be here because we have printed so much money. At some point in time, these people are going to begin to spend, and you're going to see the velocity of money, the number of transactions tick up dramatically. That's when you're going to see inflation take off. We'll go to chart we caress later on. I can't speak tonight. Let's say hello to people that join in later. Wow. Langley McManus. How you doing, pal? E. Carlson. New York legalizing pot. I think my governor is going to do anything he can right now. He's in trouble. So whatever it takes to stay in office. More bad headlines came out today. I'm not going to comment any further on it. I got to live here. Nestor, hello. Hey, Bob, took 1.5 weeks off spring break. Good timing with all the market choppy. Good for you. Hope you enjoyed yourself. Bing Na, hello. Big Bear. Cheers back to you, Langley. All right, let's take a look at the weekly charts. Oh, I see what you're saying. NFT stock. I got to take a look at this. Indulge me for a second. Now, this is the digital art stock. I typed it in wrong. Oh, this is the... no, that's not right. You sure about that symbol? All right, we'll come back to that. All right, let's take a look at the weekly charts. As always, we kick it off with bonds. This time last week, I mentioned that while the bond market was on a tear, we predicted it would remain on a tear for quite some time. But last Thursday, I said, get ready. We're probably going to see some weakness because we're getting overbought on the 10-year yield. Khalifa, hello, brother. Jerry. Driving to a showing? Good luck. All right. So 10-year, the yield curve, monthly chart. We're off the highs of the month. No great shock. We had yields that pulled back this week. We're pretty extended here. But the stock market has yet really, we haven't really had a correction. This hasn't been a correction. So the stock market's held up very, very well in the face of rising yields. And I'm talking, when I say the stock market, I'm talking the S&P 500. The TLT, the 20-year bond ETF, it's up this week. Yields pulled back. This is the first up week in I don't know how many weeks since the last week of January. So a good week, but we hit resistance. Now to the 10-year yield. We were at RSI 84, I believe it was. We have an inside week thus far this week. No new high, no new low. Now, let's pause here for a second and talk about the market. We saw the pullback on yields. The market interpreted it as somewhat of as a negative, particularly transports, what else? Banks, energy, most certainly. But today we caught a bit of a reprieve, and I believe we ticked up a bit on the 10-year. Yeah. So we ticked up higher on the 10-year by 1 basis point, not a big deal. So with that, stocks took off. We sold off in the morning. We're going to go to the equity sector in a moment, the US dollar. This is not updated. This is as of the 24th. I pay a lot of money for the software. It pisses me off that they can't update it. The dollar is broken out on the week. One trading day left to go. I'm frankly very surprised with the strength of the US dollar. But we have broken out. We can't ignore it. We do have, on a weekly time frame, the 50-period moving average moving lower. And will, in all probability, unless we really skyrocket higher here on the US dollar, we're probably going to see a negative divergence. That's when, if that occurs, that's when the dollar really begins to implode. But right now, the dollar's still very strong. We rallied up and into the 200-day moving average today. 50-period moving average is rising nicely. Stokes look good. RSI looks good. So it makes me nervous about owning silver, owning the gold and silver miners. But we're into it for the long term. So I'm all right now, but subject to change. The VIX, shockingly enough, it's down on the week. We were higher. We've reversed. One trading day left to go. A lot can happen. And we're holding critical support. Daily chart. I want to get a view of how we closed today. Brutal close. So what I think is clear here is that we are seeing a new resistance shelf form. We're unable to really hold the mid to high 20s like we used to, but we are at the lows of a trading range. But I will make a point, even though I have a short position on, I will make the point that we've broken down to lower lows not seen in, I think, since last April. This month, this week, in fact. The Dow Transports. I mean, this is a quarterly chart. A great day today. You know, sometimes I'm not short of the transports. I'm short of the Tues and of the small caps. And we have been short. And, you know, you get a day like this. I mean, the Qs closed down. The Russell 2000 reversed higher on the day. It was down by about a percentage point, reversed higher, closed up about 2.33%. So you get a day like that. It's like really shakes you a little bit. You're like, God damn it. Maybe I should have scalped the profit and, you know, moved to the sidelines. You second guess yourself and then take a step back and you reevaluate for a moment. You say, okay, why did I enter this trade? And you pull back to your monthly and weekly charts and you ask yourself, is your argument, is your reason for being short still alive and well? And the answer is, yeah. I mean, if I was short of the transports right now, I wouldn't feel good about today's price action. It was horrible. But when you take a look at a quarterly chart of the Dow Transports, I mean, whenever we've entered this type of nosebleed territory, and we have been like this before, it doesn't end well. Case in point, back here, 2006, that led you into the financial crisis. Back here, 2008, that led you into the dot-com crisis. Back here, 1989. Many of you aren't even old enough to remember what that was. That was, I just got into the business. That was the banking crisis, the S&L crisis, and that led us into recession. So this is not going to end well. It never does, but that doesn't mean we can't move higher from here. Monthly chart. I mean, this is nuts. And now they're talking about another $3 to $4 trillion in stimulus. I mean, it's mind-boggling. Daily chart, beautiful bullish key reversal bar. And we broke out on RSI. So it looks as though the transports are going to move up higher. What will help the transports move up higher? If you see yields continue to break out, you're going to see the transports move up higher. That's a signal of economic growth. So, and plus you have bond vigilantes out there. So that'll help the transports. What it won't help is technology, folks. It's going to hurt it really, really bad. So transports look good. They had a very good day. The Dow Jones, still down on the week. Daily chart. Bullish reversal bar today. Volume was okay. It was about average. The S&P 500 weekly chart. We remain down on the week, but just marginally. Volume is going to roll in light. Daily chart. Bullish reversal bar. We still have a negative divergence on RSI, a bearish divergence. Volume today was not great. Stokes continue to weaken. The small caps. We've been short of the small caps for a while now. And, you know, my rationale for being short of the small caps, nothing's really changed. They're very expensive, as is the entire stock market. We are extremely elevated relative to the 50-month moving average. We need to have a retracement of some sort. I'm not saying a crash, but I think we could easily see 190 on the IWM, and that'll hand us a nice profit. Daily chart. A nice reversal bar on the day today. Frankly, I thought we were going. I thought we were going to take out the March 5th lows. We came a hair away from it. Buyers stepped in. The algos stepped in. And they were unable to close it above resistance. I will be watching this. If we close out the week back above this resistance level, I'm going to have to think about lightening up on shorts. Volume was very powerful. You know, I want to blame it on short covering. When I see volume like this, I can't blame it on short covering. You're kidding yourself. That's institutional accumulation. We saw some selling at the close, 15-minute chart. So we're going to remain short for now. Now, the Qs are a different story. I'm a little bit more bearish on the Qs than I am on the small caps, because in the small caps, you have a lot of banks that can keep the small caps up in a rising interest rate environment. But the Qs, they don't have energy. I don't think they have any banks. And it's mostly tech and biotech. So we have a clear and defined lower high on a weekly time frame. Our Stokes are trading down below the 50 mark. For those not familiar with my opinion on Stokes, trading down below 50 and declining, rallies tend to fade. Rallies tend to fade. So the Qs are not in a good spot, especially if we begin to see yields begin to move up higher. Daily chart. Look at the weakness on RSI. Stokes lower highs. We held support today. I didn't go adding more. Look at the volume. Volume rose. So, I love to cover shorts, make profits real, buy stocks, sit and watch them go up. I can't. Because when you take a look at names like Shopify, I mean, this is a disaster area. Weekly chart. Take a look at this head and shoulders setup that's forming. Stokes are very, very weak. I think that it may take a couple of weeks, but this head and shoulders setup may morph into a wider head and shoulders setup. Right now I have left shoulder here, head here. What if we break down and retrace back down to 889 on Shopify? Trade sideways, creating a left shoulder. Here's your, a right shoulder. Here's your left shoulder, head, potential right shoulder forming. The bigger the pattern, the greater the decline if it follows through to the downside. So Shopify is looking really, really bad here. And this is a leadership name. Now, what I will point out is that volume is very low. Daily chart. Here was our tell last night. We had broken down below support, continuation breakdown today. Volume above average today. So these leadership names concern me with their weakness. See how Tesla closed out? Closed near the highs of the day. But I will point out, with Tesla, we have lower highs, lower lows, and nothing today changed that. Lower high. Yesterday, we closed down below to create a new lower low. So the trend, it's got to kill a lot of people to hear this, but the trend is down. I'm not short Tesla, but the trend is down at current. The banks, they didn't close. They rallied off the lows of the week so far. They're still negative on the week. If yields pull back, so will the banks. Daily chart, good day today. Watch for, many times when I see a bullish reversal bar like this, and you have your momentum indicators weakening, many times you'll get a pop-up higher, a fade, and then a rollover to break down to new lower lows. That's what I'm honestly looking for right now on the Qs, on the small caps. Because one day, look at this volume, horrible volume. One day does not make a trend. Technology is now up on the week. It's holding its 20-period moving average. Stokes are very, very weak. Down below 50. Volume this week, very light. The semis, for all the talk of a semi shortage, SMH is extremely weak. It's down 1.5% on the week. One of my members was talking about, I think it was John Spencer. He brought a couple of semiconductor suppliers, manufacturers, to the table. And I took a look at them yesterday, and I warned that while they're up, it was trading higher yesterday. I said if the semis continue to break down, the correlation between the semis, semiconductor index, SMH, SOXL, whatever, if that declines and makes new weekly lows, AMAT's going to break, and most other technology names are going to break as well. Biotechs, hammered. Becoming interesting, though. But look at these Stokes. Horrible, horrible price action. Good price action today, but man, this does not instill enthusiasm. Huge volume today. We'll watch. Consumer discretionary, I think this is a disaster area. Remember, what drove Q4 GDP was not the consumer, and the consumer discretionary names are showing it. Daily chart. Good day today. I get to feel that this is a one-hit wonder day. Good volume, though. Energy. Now up on the week. Daily chart. Bullish reversal bar. I like energy. So we'll be watching for energy opportunities. I always like XOM for the divvy. But that closed down today. What's the yield on this now after the pullback? %6. Oil down on the week, holding support. Gold. I'll tell you, gold needs a good Friday, man. It really needs a good Friday. Daily chart. Oh, wrong chart. Hey, Jerry, you on still? Jerry Pina. Oh, he's probably just showing. If you're on, tell me how you like that iPhone iWatch. I know you got back to me, but I want to get your opinion. And if anybody has the iPhone, not the iPhone, iWatch 6, how is it? Do you like it? I'm thinking about buying one for the blood pressure and the pulse monitoring. GDXJ, of which we are long. We're not having a good week here. Let's go to the daily chart. Ah, my line held. My line held. Stokes is down below 50. Not good. No bueno. McCarter. Bob looked at gold and thought about his blood pressure. Not a good sign for gold. Outstanding. That was great. Yeah, Sam. Hey, Sam. Yeah, golden euro terms, golden. I'm sure golden euro terms looks fantastic, but it's the euro that's destroying my gold trade. So, as a matter of fact, speaking of the euro, man, you guys are killing me here. This thing's still not done going down. It's going down further. The only thing that's keeping the dollar from ripping up even higher is the yen, which was also down today. I can't catch a break. Anyway. Nah, Nestor, it's not looking good. It could all be changed with one good Friday. We need a rally. McCarter, U.S. dollar strong when euro weak? Yes. The dollar is measured by a currency basket called the Dixie. On Thinkorswim, the symbol is hashtag DXY. And the two largest components of that currency basket, you have the pound, you have the euro, you have the yen, you have the Swiss franc, yada, yada, yada. The two largest components are the euro, by far. It's like 55% of the basket versus the dollar. So if the euro sneezes, the dollar catches it. Unless, of course, the yen, which is the second largest component, is extremely strong. The yen was looking stable earlier in the week while the euro looked horrible, but now both they look like hell, to be honest with you. So that's not good for gold. So it looks like the dollar is going up higher. SILJ, not looking good. These are the silver miners. I may have to stop out here. We'll wait and see how we close out the week. And it pays. We did, well, I actually bought more GDXJ last week. But it pays not to try to average down here. I didn't try to average down on GDXJ. It looked as though it was consolidating nicely. It even had a really great Friday at the end of day. And it couldn't hold it. Silver not looking good here at all. Stokes are very weak. But these are long-term trades. The strategy here is that at some point in time, the credit card is going to get shut off. And the dollar is going to roll over. So when that happens, when inflation rears its ugly head, you can have yields move up higher along with the price of gold, because what you're seeing is stagflation. You're seeing stagnant growth. You saw it with durable goods orders this week. Horrible. You're still seeing initial jobless claims. Very horrible. So yeah, they came in slightly versus the prior week. Over 600,000 people filed for initial jobless claims last week. That's a nightmare. So this is not an economy that's booming simply because you have government spending. It's nuts. So you need organic growth. So right now, these positions are in the doghouse. Uranium, no good. Calmaine down. All right, I'm looking at Rocket Mortgage going into the back half of the week. It's pulled back nicely. Yeah, it's basing very nice. So Rocket Mortgage members, I may be sending out an alert tomorrow. I almost bit the bullet on Tesla today. Came close, no cigar. I may sell put options on Tesla. Basically, that's, for those not familiar, when you sell a put option or you write a put option, it's a bullish trade. I'm not buying puts, I'm selling them. So I'm generating cash flow to try to get Tesla at a lower price. So those are the trades that I'll be looking at. Shopify is probably going to look good for a pop fairly soon. Buster Stack, I just saw you come on. I know that you're short. Are you still short of Shopify? Congrats, McCarter, on those puts with Viacom. All right, let's do some chart requests. I'm done with these weekly charts. You know what? Just want to go over lastly, emerging markets. One real trade that's going to emerge here, pardon the pun, is with this dollar so strong, emerging markets are going to go on sale. So keep an eye on emerging markets. They broke They broke support this week. Stokes are very weak. I think they're going down a lot lower. But longer term, we're bullish on emerging markets. How did Boeing do today? Well, this is a weekly chart. Close to an outside reversal day. You know, one thing you got to take away from what we just went over here, right? You had a very strong reversal today off the lows of the session. We need a follow through within the next 3 trading days on this. And we need it to come on rising volume. Because if we, within the next several trading days, fade and take out the lows of the day, you got to appreciate the fact that that's a horrible bearish signal, and it's going to get ugly really fast. So today was a beautiful day, and it's fair to say that when you see a day like this, you should expect to see a continuation move up higher. But beware if we don't get it. We have 3 trading days to get that. On average, that's what it usually takes. So Boeing, interesting. I'm not ready to buy here. What else? I think we're good here. Let's do some chart requests. For Nestor, snow. For Robert, he's looking for the ARC funds. Robert also wants JP Morgan. You got him, my brothers. Let's do this. I still have poison ivy. All right. Let's go back, bring the comments up. All right, so we got snow. ARC F. JPM. All right, let's do this. Bring the comments back up. All right. Steel. You got it. How much time do we have? Abel W. Hi, Bob. Can you review ISRG? Yeah, I think we'll have time. Falcon, hey, how you doing, man? Haven't seen you in a while. Yeah, we got time to go over these. Let me see if I missed any. Neo, that's an interesting one. Hymix. Okay, let's do this. Langley, FNV. All right. Snow. Really nice raindrop chart here today. First thing that caught my attention. I'm going to keep the raindrops active on the daily charts below here for those that are interested. For those that are new and not familiar with what the heck a raindrop chart is, it's proprietary to TrendSpider. It's a mixture of VWAP and candlestick charting. We'll come back to the daily chart. Forget the monthly chart. Weekly chart. I like it. It's optionable. We're beginning to consolidate here. Volume is dropping off sequentially. I guess the last time we were looking at this was when it was poised to break out, and it did break out, but it never followed through. And then it went into correction in February. Wow, this thing has been hammered. What I like here is the fact that this prior upper band of resistance is now acting as support. I like that a lot. Daily chart. Bullish key reversal bar off of that weekly support level today. Listen, I think that this could be bought easily. I would just use a stop loss right below the day's lows. If we close down below that mark, out. You got to hold this support level. I'm going to go back to the weekly chart. I'm going to share this with you. Leap calls for snow. I got to look more into it. I like the chart. I really do. All right. So bullish on snow. ARC. It's amazing. This thing did virtually nothing in 2019. Caught a cold during the COVID shutdown and then broke out. Really a beneficiary of COVID and the shutdown. Weekly chart. Got to hold 48.02. Actually, I'm going to drop this down a bit. I'm going to use this volume shelf. 47.50. It's got to hold it. Now, I'm going to go back to the topic of yields for a moment. If you see yields rally, keep in mind that that's the proximate cause of why ARC rolled over. So if those yields begin to hook back up again, you got to expect that ARK is going to take it on the chin, and it puts into question whether or not it's going to be able to hold 47.50. Daily chart. Not a bad day. Closed down, but it closed off the lows of the day. Good buying into the close. So I think it's going to pop here. You have a W formation that's formed. Here's the left side of your W. Pivot point here. At 56.50. And oddly enough, right above there, here's the automated trend lines. All right, so you have resistance right above this resistance level. So there's a lot of overhead supply here. I want to create an alert. I want to know if we break this level. I'm probably not going to buy this. Frankly, I'm not pleased with her decision to go buying Tesla, a lot of it. Weeks ago now, when I heard it, I was in shock. I heard a lot about her. I was in shock when I heard that trade. I said then it was a mistake. So I'm sure I couldn't shine her shoes, but I'm not overly impressed with her recent timing. I'm going to keep this active for a while. Go with 14 days. And we're good. So I think it's good for a trade. I'm not sure whether or not it's worth the investment yet. Yields are going to dictate that. Watch the bond market. JPM. Here's the value of the automated trend line, folks. I'm going to take them off. Click of a button. So we broke out this month above resistance. Yeah, we have a big topping tail. So unlike the ARK funds, I'll still be looking at bond yields. The difference between JP Morgan and ARK Investments is for JP Morgan to move up higher, you want to see yields move up higher, and the banks become more profitable. Weekly chart. Looks good, man. Weekly chart, rock solid. If for whatever reason we pull back to weekly support, which I'm not expecting, I want to know about it. And we'll keep it active for 14 days. Daily chart. We broke out today. Bullish on JP Morgan. I think it goes higher. U.S. Steel had a very good day today. Buying into the close. My alert fired off here. Let's get rid of this one. Now I want to know if we break out God damn it. So our alert is set. On the week, we remain down. I think that if this infrastructure bill, the chatter, becomes reality, U.S. steel is going to rally, so I like it longer term. So bullish on U.S. steel. NEO. Oh, I got to get a new desk. My desk is warped. Be careful here. God damn it. Okay. So NEO's in trouble. They tried to break it out earlier in the week. It was rejected. It's holding 34.81. That's critical support. If that goes, NEO's going down into the 20s. Daily chart. We had a good day today, but one day does not make a trend. This day here was a great day, the 19th. This one even better. We broke out, but it failed. All right, don't get lured in quite yet. So it could certainly break out on spec if you want to buy it. I have no problem. Tight stop right below the support level here at 34.46 and just get out. Add more on strength. The weekly trend is not looking good. HIMX. Monthly chart, no bueno. The however is that we did hold support. Weekly chart. An attempted breakout, but it was rejected. We're in the middle of a trading range on a weekly time frame. Now, we did, again, the value of the automated trend lines. Take them off, throw them back on. We bounced off of these two support levels here, and we reversed on the day. I'd want to see a little bit more consolidation in here. I think this could be bought on spec. Tight stop right below today's lows, because if that breaks, you're going a lot lower. The thing to keep in mind, especially with technology, what's changed in the past month and a half, the direction has changed. We're not in that strong uptrend that we were. We're in a weakening downtrend. So just keep that in mind. It's not the heydays of the shutdown anymore. Yields are moving up higher, and that spoils the party. FNV. You're welcome, Richard. Franco, Nevada. Very, very nice monthly chart. Very nice. Resistance at 125.19. Support at 106. Very nice month. Weekly chart. We're right at that upper band of resistance. And these trend lines are moving lower. So the only time I would think about buying this at these levels, only on a breakout. And it's got to close above that level. I don't care what it does intraday. By 3:59 Eastern Standard Time, it's got to be above that level and poised to close there. I like the chart though. So wait, show patience, daily chart. Yeah, you're getting a rounding top in here. If this level goes here, the bottom of this volume shelf at 120.31, if that breaks and we close down below it, we're probably going to see lower lows. So just be careful here. You're at resistance. Your risk reward is a little bit iffy, so just be careful. And with that, folks, I'm going to say thanks for joining in. I appreciate you being here. Please smash that like button. Oh, PLTR? I don't know. You mean in business? Or the look of the chart? Rick Roofing. How you doing, man? Bunch of mad lads. It's similar to Neo. I think you have a better consolidation here. Good bullish reversible bar on the day. I think it's a buy on spec, but be careful when you hit these resistance levels and watch yields, folks. If they move up higher, watch out for these stocks. Until then, next time, folks, be well. Thanks for joining in and have a great trading week and a great weekend. Be well. Do I do a stream in the morning? Usually on Tuesdays through Wednesdays. I'll only do them on Mondays and Fridays if there's extreme volatility in the markets and I have something to say. For the most part, absent that, after a live stream on Sunday and Thursday nights, there's really not much sense in it. Again, unless there's something going on that's of interest. So if you see bright green futures or bright red futures, I'll be on. All right? Have a great night. Be well.